Welcome to the Legacy Podcast. My name is Olisya Grant, co-founder of The Matrix Legacy. We are back for episode number 18. If you've been with me this long, I just want to say thank you so much. It's been such an incredible journey, and it's just the beginning. If you're brand new, welcome. This is the show where we create a blueprint for success. We look for ways to create generational wealth, and we break those chains of a poverty mindset. So, on today's episode, I figured it was only fitting to bring back our most requested co-host, my husband, Mr. Tyler Grant.
Hello, everybody. Of course, you know me from a couple episodes now, and I'm so happy to talk about, what we're going to be going through today. I'm going to let my wife, of course, talk a little bit more about it, give a little bit of intro, and honestly, that way, we're able to add some more value to your guys' life.
Yes, indeed. So on today's episode, we are talking all things investing, and not so much a deep dive, but just the very basics. There's a lot of questions that we get for people who just don't know how to start.
Yeah, a lot of questions.
A ton of questions. And the thing is, when we don't know how to start or things look too complicated, we just don't do anything. So we want to break things down on a very basic level so that you can understand the importance of investing, how you can get started, and what that really looks like. So first things first, what is investing? Investing is when you allocate a certain resource in hopes of receiving more of that resource. So for example, when people say you should invest in yourself, that means you're investing time, energy, or money even into who you're becoming, because you want to just be more of who you are. If you invest in a property, for example, you buy a house, well then you're investing in that property assuming that somewhere down the line it's going to be worth more than what it is currently. But what we want to focus on mostly today is what stock investing is. And so I'm going to hand it over to Ty and let him give you a very basic breakdown of what a stock is in the first place.
Absolutely. So let's just start off with the basics. What is a stock? So a stock is literally ownership of a company. So all that happens is that when these companies are looking to, generate more income or get more capital for their company, they're going to offer stocks available for you to purchase. So now, if you look at it like that, you can own one stock, or you can own multiple stocks in that same company, whatever is available. So then now just take it into like a deeper dive now. So now think about it where I just described what a stock is. So now imagine the stock market. So just imagine Walmart, where literally you have a whole bunch of companies offering their stock at different price points for the consumer. So now that I went over what a stock is and the stock market. So now another question that people ask, like, well, what determines the cost of each stock? Well, if you look at it, it's based on the value of the company and also, of course, supply and demand. So like, for example, when it comes to Amazon, they have so much value, which is why they're able to price their stock so high because people will buy it, compared to, let's just say, companies that are starting off. They're looking for more investors to try and get into get more capital, which is why they price it so low. And of course, if you can see trends of how each company is doing and how they're growing, the value of their stock will, of course, increase over time.
Yes.
So now certain examples. What are some examples of the stock market? So here in Canada, we have the Toronto Stock Exchange. And of course, the US, we have the New York Stock Exchange, or the NASDAQ. So those are just some examples of where you can go into those stock markets and purchase either Canadian or US companies at their, of course, valued price.
Exactly. It's literally that simple, guys. I know sometimes we turn on the news and we see the little ticker at the bottom of the screen with the numbers and the letters and the decimals, and it looks super confusing. It looks like gibberish. We don't understand that language, so we shy away from it and we say, you know what? Investing is just for the wealthy people in the world. It's not for me. But how do you think those wealthy people built that wealth?
Exactly.
It's through taking the time to sit down and understand on a very basic level what is a stock and what is a stock market. All we're looking at is companies looking to create more cash flow and more funds for their business. So they offer some ownership in their company to people like you and I, where we can get in and get just a little piece of that and start building wealth for ourselves. So another thing to take note of is there's a very big difference between day trading and then investing in the stock market for long-term wealth. That's essentially what we're talking about today. So we're not looking for the quick cash or the quick returns, but we are looking for a big reward in a longer period of time. So there's a big misconception when it comes to investing, and a lot of the reasons people don't get started in the first place is because they say, I don't want to lose my money. I don't want to lose the hard-earned money that I worked to build. I don't want to lose that. So instead, we start hoarding money and stacking it up in savings accounts and thinking that that's the best way to do it. But I was actually doing a little bit of research, and I have an incredible example for you guys. So listen to this. The basic necessities like eggs, bread, milk. Those three products over the past 10 years have increased by 34% in price.
Wow.
The price has gone up
I didn't know
34%.
that.
Exactly. But listen to this now. Wages over those same 10 years have only gone up by 13%. So what that means is that by holding our money just in one place, hoping that one day it'll grow into something, once inflation is done with it, your money is not worth the same thing. So investing in the stock market is a way that you can try to stay ahead and keep up with inflation. So it's actually more risky not to invest than it is to just take those steps and actually start investing.
Exactly, and it's crazy where it's like I speak with a lot of people, and people tell me, well, Tyler, like I know people that have lost money. They said that investing in the stock market is really really risky. Well, my question is that, okay, so the person you asked advice from, did they know what they were doing? What were they invested in? Did they actually understand the market? Did they have everything in one company, or did they diversify? These are questions that, of course, no one will really tell you. All they'll tell you is that, oh, I just lost some money, or it was risky, or it was hard. When it's like, if you know what you're doing, and it's not even just investing in the stock market, that's anything in life. If you know exactly what you're doing, it's a cakewalk. It won't be easy, but it'll be simple.
Absolutely. Absolutely. And the greatest investor, well, one of the greatest investors in the world, Mr. Warren Buffett, says if you don't find a way to make money while you sleep, you will work until the day that you die. And so investing is such an incredible way to start making money in your sleep. This is a way to get your money to start working for you. As I said before, we work very hard for the money that we have, and I'm sure you do too. So it's time to put that money to work and start getting returns on your money for you.
Exactly, and it's easier said than done, of course, to not allow your emotions to get into things. But you have to understand is that it's a risk reward at the end of the day. There's going to be some hits, and of course you're going to have some mistakes, and of course there's going to be rewards. You just have to make sure that you understand the longevity of what you're looking to do.
Absolutely. So just before we began filming this, we were actually taking a look at some scenarios, because another thing that we hear from some of the people that we work with is, you know what, I'll start investing when I make more money, or I'll start investing when I get married. And the thing is, you've got to get in as soon as you can, because a couple years difference makes a giant change. And I'm going to give you an example as to how. Let's say you're 25 years old. And over the past 40 years, the return in the stock market averages out to anywhere between 5 to 8%. So saying 8% is pretty conservative even. But let's just say 8%, because even looking back over the past 100 years, it still works out to around the same. So let's say the return that you're expecting, 8%, you're 25 years old, and you start investing $500 every single month. And you want to invest that over 40 years. So by the time that you're 65, what's your return going to be? Well, we punch those numbers into the calculator, and what you're looking at is a $1.6 million account by the time that you're 65. Now, let's say that you wait 5 years, and instead you decide to start investing when you're 30 years old. Same thing, $500 a month for now, instead of 40 years, 35 years. Well, then your account is going to be just around the 1 million mark. Still a big chunk of change, but you missed out on over $500,000 potentially in a bank account for you, simply because you wanted to wait 5 years, right? So on top of managing your emotions and not getting too excited when the prices are up or too discouraged when the prices are down, you've also got to get out of your own head and saying that there's a certain time that you should get in the market, because time in the market will beat timing the market any day. And I'm going to repeat that in case you missed it. Time in the market will beat timing the market any day of the week. So if you're waiting, playing a little hopscotch game, waiting to jump in as soon as you can. Jump in and stay in. This is about building long-term wealth.
And just remember, guys, at the end of the day, investing in the stock market is one of the ways to invest. Of course, there's plenty of other ways. Of course, real estate, of course, businesses. There's plenty of ways to invest. And when it comes to the stock market, this is longevity. This is long-term growth. So if you're looking for, let's say, a goal, where it's maybe before, like within a 5 year time span, maybe it's not exactly right for you for that particular goal, just because you're not allowing the stock market to do its job so you can see those consistent returns. So you have to make sure you understand your goal and understand your time frame, so that way you can allocate the right investment for you.
Absolutely, guys. So essentially, that's what we want to leave you with today, guys. The building block of the day is that one, investing is essential in order for you to start building wealth in your life. And it's a long-term game. It's consistency, something that you do over a long period of time, like anything else in life. Investing, although it seems scary and risky, once you break it down into small bite-sized pieces, is so much easier to understand. And it's so crucial to building that long-term wealth, that generational wealth that we always talk about. And so we're probably going to do a part 2 on this, because after you know the basics of the definitions and things like that, the next question usually is, okay, so how do I get started?
Mhm.
So if that's something that you guys are interested in, go ahead and leave us a comment. We'll go ahead and build in a part 2. But for now, if you received any value from this, go ahead, like, comment, subscribe, send this to a friend so that they can learn the basics as well. If you're looking for any resource where you can learn some more definitions and terminology, we've just launched our Matrix Legacy app. So if you head over to the App Store and download that, we've got your daily inspiration and your tools. It's really for aspiring entrepreneurs,
Yeah.
side hustlers, and big dreamers. It's a place where you can come and get all the information that you need. I will be here next week with another building block for success. Until next time, let's build a legacy.
Until next time, guys.